Your shares are currently indicated to pop at the open, $30 to $32. How does that make you feel, John?
It's a wonderful day. It's a wonderful day for our company and for our customers around the globe.
Okay, so we could see that sort of movement higher. $26 is where you priced. You are 25 times oversubscribed. So for those that didn't manage to get in, what's the thesis here? What are the growth opportunities for HawkEye 360?
Well, it's a very durable, all-weather company. We obviously have a value proposition of providing signals intelligence to the warfighter community during times of geopolitical volatility. But our capabilities are orchestrated to provide value in all environments and all business conditions. And we have a track record of having built a very durable company that works in any operating condition and in any economic environment.
You only operate a constellation of more than 30 satellites. How does that look to grow, and what actually do those satellites perform right now?
Yes, so our constellation today is over 30 satellites that provides an exceptional revisit rate over anywhere on Earth, as well as very low data latency, so we can get that data to our customers, the warfighters, in a timely manner. All of these conditions provide for capabilities that the warfighter is using in places like the battlefield or in the South China Sea to be able to detect and track dark vessels. We have a very exquisite value proposition of being able to geolocate, analyze, process RF data, and deliver that to warfighters on a timely basis.
How does that expand? Is it just the US government and it's more of the budget that is an expanding budget coming from the Pentagon? Or is it other allies that you work with? How are you seeing the growth of HawkEye 360?
Well, we've orchestrated our company to be very diverse in our revenue base. So we have a US government business that's significant. Today it represents about 75% of our work. In the past, our international business has been upwards of 50% of the HawkEye heritage capability. We have a number of great international customers. We're very pleased to be able to support them, and the growth drivers on the international side are very robust.
You are using the money, the funds raised, to repay debt and to help fund deferred payments related actually to an acquisition you made in December. What about that? I mean, you bought a Dallas-based provider of signal processing technology. Could you add on anything else? Or is acquisitions in an inorganic growth a way to continue to expand?
Well, we're quick to want to combine the organic growth of over 70% last year in 2025 and the exceptional profitability of over 20% on the adjusted EBITDA basis in 2025 with continued inorganic growth opportunities. Now that we've acquired ISA, which is a meaningful acquisition, both in revenue and profitability and an exquisite fit for our technologies, and we have the institutional muscle to do this, we anticipate doing more acquisitions, and certainly the IPO provides the proceeds for us to enable that.
What's interesting, John, I mean, you raised, I think, $173 million in a Series E funding round. You were nearly $2 billion, according to PitchBook. Why not stay private? What we've seen is, massive companies wait for extraordinary lengths of time to eventually tap the public markets. Why was it right for you now?
Well, the warfighter deserves the very best suppliers of capability to them, and the IPO process provides exceptional validation to ensure that a company like HawkEye 360 is capable of delivering valuable intelligence to that warfighter. So we appreciate the bona fides and the validation that we've gained from becoming a publicly traded company, and obviously we appreciate the resources that are now on our balance sheet that will enable us to execute against special initiatives that will provide growth to support the warfighter.